Sauce Factory Wednesdays. Yo, welcome back, welcome back, welcome back. I know it's been a couple Wednesdays we ain't been on, but life be lifing. But we back in here, Sauce Factory. You already know what time it is. Now, the conditions of the market had changed up a lot. This all of March, all of February, things been shifting, things been changing, especially in March. We seen a lot of up and downs. And I've been talking to a couple of traders, like a lot of the techniques ain't working and holding true like it used to. A lot of things changed up on us. But the great thing about that is always able to adapt. Today I want to talk about short-term trading, doing short swings, being very intentional about your entries, exits, taking profits, not overstaying your welcome, right? Right now, we got a video up on the chart. You see, initially we had 2 days of rise since Wednesday. So starting a week off, boom, we came to low, we pushed up. But you see, we closed right at 104 today. Let's go down to that 1 hour chart and we'll peep game real fast, see how that shook out. I got the session breaks on. Now, from Friday to Monday, you seen how we open up on that gap. Mark that gap out real quick. Now that will let you know what time it is because with that gap being filled, you already know they retraced price once they got to their desired destination. They went on and rejected, right? But you got to realize what did that really mean, where it came from. So we actually throw a fib on that high to the low. They got up to about 38%, which was enough to fill this gap, was a desired location. And then there we go, we got that rejection. Now we look at the fib extension and negative levels. We looking at a projection of 98.53. Price can get down to that level. I'm looking for a price to get down to $100 a share. If it gets down to 98 or 92, that would be a great deal for me because I'm a long-term investor in it. I'm not looking for the short-term game. I'm looking for the long-term game because it's a vital product in today's new society. With the robots being created, the new artificial intelligence, all the other devices, everything has these chips. Who leading the game right now? NVIDIA. It's nobody else as strong as them. They are number one. It is simply having a retracement right now. Of course, people got to take profits. NVIDIA went out of control a long time, went unchecked. So now they're bringing it back down, but more is to come. That's why I say, like, hey, focus in on that and get it how you live. Key is you had 3 days of rise, right? You should have been taking profits. We got to these levels here, right? Where do they really key off of? You see, you got a volume imbalance right here. That you want to pay attention to stuff like that. You had a nice volume imbalance right here. Boom. So you had that little wick right there, a little small little pocket on lower time frame. It's a nice volume. Where did they touch it? Right in that imbalance, reject off of that, and kept it pushing. If you was already in, you got your gap fill, you should have been exiting, waiting for the next move to happen. We are in a down trend right now. We're not bullish. We're actually bearish right now. Looking at the charts overall, let's go back out to the daily and you'll see what I'm talking about. But before we do that, we're going to clear the charts. So easy things to do. What's the trend here, right? Boom. That's our current trend. If you look at it, we got a little more aggressive from this trend. That was the original downtrend and it shifted and went down more. Now we are starting to pop up. We have found a level of support right here at 103.78. I decided to buy from. They had some reactions here before. So we're going to see what happens as this develop more off in the future. But let's keep your eye on the video. All right. Let's kind of take a scroll over to Tesla. I want to definitely get on Tesla. I was playing around with this chart earlier, kind of keep my eyes on it. So same thing, right? You had the initial downtrend. Then Tesla got a little aggressive. And this is the great thing about that aggressiveness. So it actually set us up for the bump and run. But you know about that chart pattern. You see, this is the setup. So this is a bottom reversal. So from a bearish to a bullish reversal. So it's in a bearish trend, it's reversing up. Your target will be right here. That's the initial one, but the reality of it, it can go 10 times harder. So if you go to the big book of chart patterns where it broke this wave to the low, all right, long that bad boy. You want to move that over there. So we looking at a possible pop of 449.38. Go ahead and rock with that. So it can be possibly returning back to those highs. But right now, there's a lot of news pressing on Tesla, so you want to keep your eye on that. The simple fact of the matter is people hate Elon right now, and they're gonna be tripping. They tearing up the cars and not buying all of the little crap. But once that blows over, Tesla gonna. What up, D Nice? D Nice, what it do, baby? How you living? Eyes on
Good,
Tesla.
good. Just sliding through.
Sliding already. I appreciate you. I'm just running down on this real quick. You already know what time it is. Just running through these charts. How you been doing?
Great. You?
I'm smooth out here.
That's what's up.
Yeah. Looking at these stocks real quick. We just dropping on here, what we gotta do. Yeah, so see, Costco's made a little 61% retracement with the rejection. Yes, sir. See, this that fake little setup right here. A lot of people didn't see this coming. We got on our chart. No, that thing said, hey, hold on, Jack. Here to here. What day is that? Put a vertical line in. I don't know why they don't want to show up on it. There you go. Hmm. Nothing strange here. It said on the 30th, no, the 31st, it said it hit the 61. I know I ain't crazy. That thing said it hit 61 on the 31st. I don't see that on there. Let me do this. Boy, trading tweaking. Man, what? Was this an after hour cap? Hmm. Said it went. Ah, that thing tweaking. Y'all seen how I seen it. All right. So Costco going back bearish. They was overbought too. Even though everybody been pushing the narrative on them, they supposed to be the go-to store now with the controversy of the DEI and all the other foolishness, right? But everybody hating on Target. They driving them to the dirt. They getting whopped even more with all the protests, and they doing pretty bad. Target cheese is sliding off its crack, and I don't know when it's stopping. All right, I'm gonna tell you that right now. And like I said before in previous videos, Target been doing bad. Just keep it a buck what you see. They've been doing bad since 2024. Hey, same time last year, they cheese was sliding off the crack. All right, so this ain't nothing new to them. That little pro boycott stuff is really just helping them go to the OTT market. Them balls gonna be out of there. But thing about Target is you got Target, Walmart, and then you got dang on me What's the other store? Costco. Yeah. So with those, you only got so many options. Now they're gonna slide, but I think they should be fine by the simple fact of you only got three major box stores, and you can't really assume that Costco can overtake them because of the simple fact of their business model, right? Costco is a whole food store. They sell in bulk, right? They wholesale everything. Versus Target selling individual items. Not everybody need, wholesale items. You just over purchasing at that moment. And still is a well established store, a lot of real estate in place. It's gonna be like hard to who can replace them. So I don't think they'll be going away, and then they'll really put us in a bind because you got Walmart. There's is pretty much gonna be the only option outside Target for this big box store to get clothes, groceries, etc. Right? Unless small local mom and pop stores can pop up and take that little need, fill that little void, we'll be all right. Now let's get over to this crude oil. Let's talk about it. Let's talk about it. A lot of people don't want to talk about the crude oil. Everybody think it's gonna be driven. They going this, that, and third. But like realistically, right? With the US finally got the oil rigs back up and running, we drilling like we used to. I really see you see what's going on. All in the consolidation. This is the range. And I don't think I'm going to go this high. So the high of this range to the low of this range, right? So, so 88.28 is the high, 65.75 is the low. This is the working range. I love trading crude, but currently with the market conditions and uncertainties, I haven't been trading it. I've been watching it. It's really in a bind. The market is tightening right now. And if you really look at it, the range is starting to get tighter, right? So this is the old previous range, but we haven't been able to hit that in a while. So you can see the box is limiting, right? We haven't been able to hit the 80, what that 80 set 84.78. Now we tightening down here. So you see the box is shrinking. The low is still staying the same, but the highs are also getting tighter. So we're gonna get into a little much. You'll probably get into a shootout trying to trade this because let's go down to the 1 hour chart and you can see the hourly moves. Really look at it, let's say from the low of a day to high of a day, you got like $1.20 move, but you got to have perfect timing, right? And then really and truly, you look at it, you're not going to get that on an everyday. This is a 90-cent move, right? Not every day going to be a good day to trade crude that you're looking at how tight the market is. So you can catch a day with a good pop and get you $1 plus $2 move. You'll be great. But the thing is, it have to be a $2 move available for you, so you can at least get a dollar move because of the simple fact you got to take an account of your entries and exits. You can't just say I'm gonna get $1 out of this if it's not available to you. If it's only $1 available, well, count on you not getting the whole entire dollar because you need confirmation. You just can't hop in and just pray for the best because that is gambling at that moment. You're trying to play probability, right? That ain't gonna just happen to work like that. We in a range, so understanding range trading is what's the top of my range. When I get close, start looking for the reversal, right? So when it hit the low, when it get back down to 65 and some change, well, guess what? I need to start looking for the reversal back to the upside because all the thing gonna do is bounce from here to here to here, may go up there, right? That's all it's gonna do. It's staying in this range right now. As you see, this the middle of that range. This is where we've been at, but we've been trading on the bottom side of this range. So with range trading, either you will get in or you will stay out. With this level of price action movement, I'll just simply stay out of this. I won't touch it. It's too tight, not enough wiggle room, easy to make mistakes. This just a no fly zone. I'm not trading it. I'm just gonna stay out of crude until actually increase the range, or I need a little more range expansion, at least a $3 range for me to want to play with this. Already a slow mover. I'm not gonna take a chance of risking my money. So this is one of those you sit on your hands, stay out the way type trades or type markets, and you simply find another instrument to trade. You don't have to be dead horse. This is trading one on one as rookie, learning, right? You can't make those type of mistakes, so you got to stay smooth with it. All right, now let's get over to gold. They are making progress, right? This is what I want to see. Gold is still pushing up. It's a little too vertical for me, but still, that's good progress. Now we switch over to the 1 hour chart, and you see we're still getting some upwards movement as long as you're trading with the trend, but we're definitely getting some play action here. Now, what I like to see, let's take the low for that day to the high. Boom, that's a $40 move, 458 ticks. Still is great. Still smooth to me, right? Boom, 300 something ticks from that low to that right there. So here you go, 300 ticks, 100 from that point. So when you get moves like that, those are great trading opportunities, great ranges. You only need 100 ticks to have a fantastic day. Anything more than that, it is what it is. Be cool, but you don't need more than that. So understanding good trading ranges where it is high probability where you can make a mistake and still have time to get corrected. You don't have to worry about trading in tight ranges where there's not a lot of opportunity there and not enough money on the table to worth risking your account. When days like that, a lot of times I just simply go over to the option market where I can buy time on my contracts and I can have better trades. I'm not looking to take a lot of risk here. I want to be risk averse. So I'll go play options where I can buy as much time as I like. So if it start trading in a range, my contract is not being devoured by the erosion of time. I have that time to sit back and be cool. So that's what it is. All right. And that's we're on this gone ahead, cap it right there. That's the importance of trading in tight markets, trading the range, having defined targets. So yeah, let's go ahead and stop this week.